Hey everybody, it's Brian. Thank you so much for joining me today. We're on to our next lesson, which is developing a trading plan. We've been over quite a bit over the last few days. We've talked about the different markets. We've talked about some very basic trading strategies using trends as well as support and resistance areas. So next up is really kind of putting that all together into a trading plan that allows you to operate in the market the same way every day. So let's go ahead and get to it. As always, before we jump into the meat of things, I have to let you know that I am not a licensed investment advisor, and I certainly don't pretend to be one here. I'm just showing you information, methods, tools, things that I've learned through the years that have helped me, and I hope that they help you as well. As a reminder, trading does involve risk. There's a huge potential for rewards, but there's also a flip side of that, which is a huge potential for loss. So it's very important that you always trade with money that you can afford to lose, money that's not going to have a huge impact on your quality of life if it evaporates. All right. Obviously, if you'd like to read the full disclaimer, you can push pause, read that disclaimer, and then push play again at your leisure. So let's go ahead and get into it. Why do we need a trading plan? Why can't I just say, well, I kind of understand what support and resistance is. I know what a trend line is. I know how they work together. I understand the different markets that are out there. So why can't I just start trading? Why do I need an actual plan, something that's written down? Well, the reason you need a plan is because when you have a plan, it removes some of the emotion. I know I say here on my slide that it removes emotion. It doesn't remove emotion. We're emotional beings. That's what we are. We're humans. We're emotional. But by having a plan, it does help ground us a bit and take some of that emotion out of it because we've got a system of rules that we can operate through. Having a plan gives us a method by which we can review all the data that's important to us before we make a decision, as opposed to just seeing one piece of information and then jumping in to a trade that may not be in our best interest when we take a step back and look at all the information that we need to be aware of before we make that decision. It also ensures that we're consistent. If we have a plan and we're following that plan, then we're going to do the same things every single time we go into the marketplace. It's going to help us be consistent, and by being consistent, that helps us generate profits over the long term. Because obviously if we've got a plan, that plan is going to be based on something that gives us a statistical advantage. And through that statistical advantage, it only plays out if we are consistent in our operation. Obviously also the last thing, the reason for having a plan, is it gives us something to go back and check against when we're doing review and ongoing training. If we don't have a plan and we're just kind of winging it and we record our trading session and we go back to look at what we did well, what we didn't do so well, find ways to improve and ways to grow, we won't know what was right and what was wrong. And right and wrong, by the way, of how we traded has really very little to do with the outcome of the day, whether we made money or lost money. Really, that comes back to how well we executed our plan. So if we don't have one, it's hard for us to review and find things that we could do differently or do better in the future. Right? Now, how do we create a plan? Well, creating a plan doesn't have to be very complex. There are actual courses all about trade plans. I've seen people's trade plans that are multiple pages. They're like a technical document, with 10, 15 pages. I don't think it has to be that difficult or that in-depth. You do want to have some things defined, obviously, but it doesn't have to be hard. Just like my take on trading overall. Now, I know, obviously, I talk about and use some very, very, very simple trading methodologies, but those trading methods work. Now, I know there will be people that argue that it's too simple. Yeah, sure, maybe. But, I feel like the simple stuff works. I apply that same method to when we're looking at creating a trading plan. It doesn't have to be something that's huge and really technical and in-depth. It does need to hit the high points and hit the things that are important to us, but it doesn't have to be this crazy document that you'll never look at again. I like these one-pager type of trading plans. So when you're creating a trading plan, just simply take a step back and think about, first, the motivation. Why are you trading? What are you trying to attain through trading? So, figure out what your motivation is and set some goals. As I said before in some previous videos, the why should be something greater than I just want to do this to make money. You need to make money for what reason, right? Maybe it's to fund your next vacation. Maybe it's to send your kids to school. Maybe it's to buy a car. Maybe it's to pay for an operation. I don't know. It needs to be something that's fairly substantial. If that why is deep enough, that's going to help you stay on track with your trading plan. And then having some incremental goals is really important as well, because if you've got goals, to work for on the short term, it gives us some things that we can take pride in as we achieve those. And these small wins are very important for our psyche and our subconscious. When you're creating a trading plan, consider what size account you're starting with, and then consider what risk you'll be willing to take on any given trade. That's a big deal because that's going to dictate a couple of things. Understanding your risk size and what amount you're willing to risk on any given trade will help you understand which markets you actually can trade. Remember, we talked a few lessons back about the different markets and what it takes to get involved in them. Obviously, if you're trading options, or if you're doing some basic option strategies using like covered calls and things, you have to have enough capital in order to purchase 100 shares of a stock that you'd be writing calls against. In the futures market, you need to have accounts that are $10,000, $20,000 in order to be able to trade a lot of these instruments and have a risk level that's low enough to not be taking 10, 15% risk per trade just through the minimum requirements of what you'd be trading on some of these contracts. So keep that in mind. How much are you willing to trade? I talked in an earlier video about keeping your risk levels to 1 or 2% on the maximum, especially as you start out, and maybe even less than that. As you get going, until you're comfortable with A, your trading plan, and also B, with actually taking a loss. Because it's easy to say I'm comfortable with risking 5% on a trade. It's easy to say out loud. It's more difficult when it actually happens. How comfortable are you when you actually take that loss? So really give some consideration to risk size. That's going to mean that's going to be very meaningful as you get further into this. Think through your time constraints and your lifestyle constraints. What other obligations do you have? When are you going to be trading? What hours do you have in the day to be able to devote to the skill and skill development of trading? So think through that. Again, coming back to time and lifestyle constraints, that might dictate which markets, again, you work within. Maybe it's crypto because it's 24/7. Maybe it's Forex because it's 24/5. The futures market, while it does, a lot of instruments do trade around the clock thanks to electronic trading, it is much more active during the U.S. trading hours, same with the stock market. So things to consider there around time and lifestyle constraints. So think that through. What hours of the day will you consistently be able to be at your desk or your trading terminal watching the market, learning, and making some trading decisions? Then you'll want to develop a pre-trade checklist. What are the things that are important to you as you get started with the day? And then, of course, you're going to want to have a way to track your results. So, how much are you risking? What was the outcome of each individual trade? And maybe some notes. It's kind of like the tracking process. I think of it kind of like a journal or a diary, a way that you can go back and evaluate, later in the day or even a day or two after it's occurred to understand what you did and see if you actually followed your trading plan. So, what were you feeling when you entered the trade? What was happening around that? What point did you enter, so on and so forth. So let's talk a bit about the pre-trade checklist, though. What is important when you're developing that checklist? For me, the things I look at are support and resistance levels. So, I like to start with a 4-hour chart, and I'll look at where my support and resistance is on that 4-hour chart, and then I'll zoom in to a 30-minute chart and have a look there just to see how price for the day is interacting with those larger levels. And we'll get more of this. You'll see more of this as I do some of the live analysis, which will be showing those live streams on Facebook as well as on YouTube. So, you'll want to subscribe to those channels so you can be sure to see the updates as I'm doing them. But I like to look at support and resistance levels. I also like to see what my channels are. When you look out at a 4-hour chart or a daily chart, you're able to see, is the instrument that you're trading, is it kind of constrained to a certain high and a certain low that it seems to be bouncing and trading within. I also like to look at my trends. What's the macro level trend, and then what's the intraday trend on that individual instrument that we happen to be looking at. Then, before I start trading for the day, I'll pull up a news source and see what the scheduled news is for the day. I'm not too concerned about the news or the outcomes of the news, but it is important for me to know what's happening for the day because that might help me make a decision either to enter a trade or stay away from the market altogether if it looks like we're going to have a very impactful news event that could create a lot of volatility in the market or a lot of uncertainty in the market. So if it's something coming up like an FOMC announcement and we don't know how that's going to go, it might be better just to stay away from the market until it comes out and then come back in after the news has been released and we have an idea of what direction our market makers are taking things. Checking the average daily range is interesting and important. I don't really do that with futures as much as I do with Forex. With the Forex markets, I am interested in what the average daily range is and how the current market is performing against the typical average for that currency pair. I don't really do that much with futures, but it is something that interests me in Forex. And then, of course, it's important for me to understand what session I'm trading in. And again, more important in Forex than it is in others, but for futures even, I do some pre-market trades in that 7:30 a.m. time frame, Central Time, and the market really doesn't get underway until about an hour and a half later. So it is important for me to understand who I'm trading with and the time period that I'm trading. In Forex, it's important for us to know, are we trading during the London session? Are we trading during the Tokyo session? Are we going to be trading during the overlap of the London and Tokyo, or the overlap between London and US, so on and so forth? What trading session are we trading during, and what is expected during those periods of time that we might be entering our trades? Those are really important checklist items that you might want to consider as you're preparing yourself for the upcoming trading day or trading session. All right, so just to quickly summarize, I'm trying to keep these videos short for you, but having a trading plan is extremely important. It is, in my opinion, one of the differences between success and failure. If you don't have a plan, then you really don't have anything to measure yourself against for your performance. You've got to have a plan to understand how you're performing to that plan, right? Trading actually becomes easier when you have a well-defined plan. When you've got a set of rules that you can work within, trading becomes easier. And what do I mean by that? How is it easier? Well, it doesn't mean you're going to win every trade, but it means that there's going to be less worry necessarily around each trade. When you've got a set of rules, and let's say you're using support and resistance areas, and price is just absolutely midway between them, you have nothing to worry about. You're not trying to figure out a trade or anything to do right now. You can sit back, you can relax, you can wait for price to come to one of those areas, and at that point, you've got a set of rules for how you're going to react and what you're going to do with that trade as it approaches one of those key areas for you. So it makes it easier when you've got a plan. There's less to worry about, and that helps prevent emotional trading. When you've got a good plan, you're not getting overly emotional around what might happen. You're working with what has happened and what's happening and making decisions around that. So it helps prevent that emotional trading, which leads to overtrading. And that will in turn help you reduce the number of bad trades. And that's what it's all about. It's all about finding that consistency that we're operating within that gives our actual statistical advantage the opportunity to work for us, as opposed to just winging it and hoping for the best every time that we click the button to buy or sell. All right, so that's it for now. That kind of puts things together. From here forward, keep your eye on Facebook, keep your eye on YouTube, and I'll be doing more live trainings as I'm looking at the market in the morning, as I'm doing recaps at the end of the day. It'll make a lot more sense, I think, to take these things and apply them as you see live real-time examples. All right, so that's it for now. Have a great day, and we'll talk to you soon.